Reverse migration pushes e-commerce festive sales to Tier 2, 3 cities. Walmart-backed Flipkart and Amazon India have both seen sales more than double in the first 48 hours compared to the 2019 festive sale edition. Flipkart's Big Billion Days BBD sales started on the 16th of October, while Amazon's Great Indian Festive gift sale started for Prime members on the same day and was opened for all the next day. For Amazon, 91% of its new customer base came from Tier 2 cities and beyond, while Flipkart witnessed almost 65% of its new customer base from smaller towns and cities. Amazon claimed this was its best first 48 hours festive sale ever in India, with over 1.1 lakh sellers on its platform already receiving orders. Smartphones, consumer electronics and large appliances continue to be the biggest selling categories in terms of gross merchandise value (GMV) for Amazon, while fashion and consumables were big in volumes. Categories such as tablets are witnessing a 300% increase in sales. Premium smartphone launches have gained traction even in smaller cities, compared to previous gift sales, Tiwari added. Rival Flipkart witnessed a 40% jump in smartphone sales and 50% increase in people availing product exchanges over 2019 Barbados dollars. Large-screen televisions, laptops, IT accessories witnessed an increase of 1.4x from last year. Equitas Small Finance Bank IPO opens this week. 10 things to know. The share price band of Equitas Small Finance Bank IPO has fixed at 32 rupees 33 rupees. A portion of the issue is reserved for shareholders of Equitas Holdings. The IPO of Equitas Small Finance Bank opens on October 20th and closes on October 22nd. The value of Equitas holding will fall to 82%. Lot size is a minimum of 450 shares a lot and in multiples of 450 shares. Shares of Equitas Small Finance Bank are expected to get listed on November 2nd. The share allocation in Equitas Small Finance Bank IPO is likely to get finalized on October 27. According to RBI norms, the promoter of a small finance bank must reduce their shareholdings in the bank to 40% from 5 years of operations. Equitas Small Finance Bank will complete its 5 years of operations in September 2021. In a note, MK Global said, "We have coverage on Equitas Holdings with a buy rating and a target price of 64 rupees for its superior asset diversification, reasonable liability profile, better management pedigree, healthy return ratios and reasonable valuations. Our current target price for Equitas Holdco implies a per share value of 40 rupees for Equitas Small Finance Bank." Market weathers COVID waves, but volatility continues to rattle investors. Markets may probably take a breather till the US elections are resolved. With a decisive mandate, another round of stimulus could be on the cards, which would be good for emerging markets. In that sense, any major dip could find investors opening their wallets a bit more. Global and domestic equity markets continue to be rattled by COVID-19 waves and lockdowns, but investors are taking these bouts in their stride. Last week's Nifty 50s jump beyond 12,000 for the first time in 8 months brought in a marginal selling wave. This shows that at higher levels stocks are edgy as valuations are over pre-pandemic highs. The Nifty 50 price-earnings multiple of about 34 times is well above its long-term average and much higher than pre-COVID highs. Of course, while valuations could soften with the earnings season underway, the elevated multiples mean that investors should be on the watch as doors seem open for some downside. That said, the earnings season is off to a good start. Of course, tech companies have been less impacted by the pandemic and some supply-side disruptions are behind. That's the reason why tech companies have been able to largely beat estimates. Revenue growth for Wipro Limited. Sharp growth for HCL Technologies Limited. Banks will have more defaults because of the slowdown, and with a lot of local retailers still struggling to get back their volumes. Some of the growth momentum of Q1 for FMCG companies is expected to sustain in Q2. Demand for cement is also perking up, showing that construction activity is rising. The second round of fiscal stimulus should be quite encouraging for infrastructure and cement companies. Metal companies could get their mojo back, particularly steel companies. Steel prices have perked up sequentially, and that could see companies like Tata Steel rebound to profitability. Other metal companies are also expected to show sharply better profit growth sequentially. The Indian markets, however, depend on steady inflows. On that count, foreign portfolio investors' marginal buying in the domestic market will provide support. Domestic investors, though, seem to be on a profit-booking mode. Stocks of recently listed initial public offerings fell after clocking sharp listing gains.